being proactive versus reactive. In this video today, ladies and gentlemen, we're going to talk about why August 15th is a very important day or a big day for smart money because we get to see what smart money is doing and how smart money is acting. So, in this video, we're going to talk about what is smart money, what is the 13F, the pros and cons of the 13F, when it comes out, and how to look up the 13F. So, make sure you stay tuned. But first,
hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
once again, ladies and gentlemen, boys and girls, and children of all ages, this is the Investor Show. As always, this is your gracious host, the Prince of Investing, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're gonna jump straight into it. So the first thing you guys and girls saw me talk about was why is August 15th an important day for smart money. So first, it's going to lead us to the conversation of what is smart money? Is it money is my money dumb or is my money smart? No, smart money is essentially what I have pulled up here. This is from the SEC website, what talks about the Form 13F. And it talks about the people who have to file 13Fs. So the people who have to file 13Fs are big insurance companies, pension funds that control $100 million, right? $100 million or more. So it was created in 1975 for um, companies like mutual funds, hedge funds, trust funds, pension funds, insurance companies, registered investment advisors who have at least $100 million of assets under management, right? And this was created to so people can see what is big money doing. Some people like to call it big money. Some people like to call it smart money. The reason why some people like to call it big money and smart money is because this money is so big that it can move the market. So if somebody took $5 million and brought a bunch of Apple at one time, that can actually potentially shift the market. So people love to pay attention. What are the big boys doing? So this was passed in 1974 to 13F because to increase transparency to other investors. Little investors were saying, "Man, I don't know what the big guys are doing. When they buy a stock run up. When they sell a stock go down." Like banks, when banks make investments, they move the market. So before 1975, you didn't know what the big boys were doing. You know how these reports come out saying, "Oh, Warren Buffett brought this, Ray Dalio did this, George Soros did that." This is how they figure this out, ladies and gentlemen. So in this video, I'm going to teach you how to be proactive and to see what smart money is doing and why is it so important to follow. So the first thing is you guys already heard me talking about it. Guys and girls already heard me talking about it. What is the Form 13F? So right here, I'm sharing my screen here for the people that can see this. The 13F is a form that's regulated by the Security and Exchange Commission. It requires every investment advisor that has over $100 million of assets under management after every every quarter, 45 days after every quarter, they must file this form. So in this video, don't worry about it. I'm going to show you what one of them look like. They must file this form telling all of their holdings, what they brought, what they sold, all that other good stuff, right? So this is pretty much on sec.gov if you want to look up more information on the 13F. This pretty much you can just type in a 13F form. It'll break it down and tell you who has to file it, why they have to file it, when do they have to file it, all the other great stuff. So this pretty much big money has to turn in what did you do in the last quarter? What are your holdings, right? So now we're going to get into that we know what smart money is, what the 13F 13 form is. We want to know Prince. Well, that's good. How can I look it up? So right here, I'm going to talk you guys and girls through it, but I'm going to walk you through it as well, how to look up a form 13F. So let's go here to SEC. All right. All right. So you're gonna go to sec.gov. That's gonna be Sam Echo Charlie.gov. Backing this off here. Let me clean some of this off. So now when you get to the sec.gov, So right up under the top banner, you're going to see a thing called filings, right? You're going to go to filings, and right up under filings, go to the top one where it says the Edgar Search and Access. So right on the sec.gov, you're going to go to filings, Edgar Search and Access. When you get here, what you're going to go to latest filings on all of them on your left hand side to go to latest filings. When you go to latest filings, right? You got your latest filings. This is the latest things that were filed. Right up on the form type, you're going to type in 13F. So right up on the form type, just 13F and hit enter. So right here, these are all the latest 13F forms that were filed. So look at all these big Hamilton Webb, all these banks, all these big money companies. You get to see what they're holding. So let's look at this Ziggler Capital. I'll click on that, click on documents, and let's go down to the third one, information table. So right here, this is telling me they hold Intel, they hold a Vanguard Index, they got Foot Locker, they own Oracle, Sonic. Who else they got in here? They got some iShares, Cisco, AT&T, JP Morgan Chase, S&P 500, Coca-Cola, PayPal, iShares. And not only do they hold this, this is to tell me if they brought or sold it during this time period. How much do they own? Did they buy it? Do they share it? All of the good stuff, right? What do they own? Common stock, Class A, all of the good stuff. So this is what a 13F form looks like, and that's exactly how you walk through and you can look up. So now when you're looking at this, you're like, okay, Prince, you taught me this 13F. I can look it up, but what good is it? Don't worry about it. We're going to go to the pros and the cons of it right here. So the pros of the 13F form is it gets to tell you what, to me, what I like to look at it for, it can explain to me why certain things are happening. Right now, you're seeing gold shoot up, and you're wondering, man, what's making gold shoot up? That means somebody somewhere is buying it. So when the 13F forms come out, which is August 15th, because you had January, February, March, 15 days after March 30th, 15 days after March 30th is April, May 15th, right? So the second quarter is April, May, June. So 45 days after June 30th is August 15th, if I'm not mistaken. So that is the latest day that you can that they have to file. So most companies like to wait to the latest day. That's the latest day they have to file their 13F. And this is when you get to see, oh, Warren Buffett sold this. He didn't buy anything, or he did this, and this company did this, and big money is doing this. So they have to file by August 15th. That's the deadline. And most companies like to wait until that last day because they don't want to tip off the competitors of what they're buying and selling. Because if Ray Dalio tell everybody he's buying a bunch of Amazon, another company may buy a bunch of Amazon, sell it, run the price up. So most companies like to wait to that last day, which is August 15th. So now, what are the pros? I get to see what a company is holding, how much are they holding. Maybe, I feel like, hey, I'm small money. I want to know what the big money is doing because they can influence the market. They can make the market go up or down with one trigger. Because if somebody buys $50 million worth of Amazon, Amazon price is going to move. If somebody sells $50 million of Amazon, Amazon price is going to move. So now I kind of get to see the mental. Why did they buy this? Or why did they sell this? Why didn't they do anything? Why did they load up on gold? Are they buying gold indexes? All these type of things kind of shape my way as an investor to kind of understand what's moving. So the pros of looking at 13F, you get to see what money is doing, where money is flowing in and out of, uh, what are people buying, what are big money is buying and selling, because they are the market movers at the end of the day. But just like anything else, it has pros, you got cons. So one of the cons of the 13F is that it's old information. So for prime example, on August 15th, they're going to tell me something that was already done. So on August 15th, let's say if some a company brought they sold a bunch of their shares in April, right? I won't find out until August 15th, 3, 4 months after it's long gone. So it's already happened. It's not something that you can do and jump into the market now. You can get that, everybody get that herd mentality. Oh my God, this smart investor in big money is jumping behind Uber. So everybody else runs behind Uber now. So it's that all of that movement is already baked in. It's thing, you saw a company run up or You saw a company run up or run down, you don't know why it happened. The 13F can kind of tell you why, but you can't react to the 13F. I can't say, oh, this person brought Bank of America, let me buy it, or let me sell Bank of America. No, this happened already months and months ago, right? You're just finding out about it now. So that's the cons. It's old information. The 13F don't give you a whole lot of information. It just tells you what the person brought, uh, what they're holding. It don't give you a bigger picture of why all of the good stuff is. You can see the tablet pulled up right now. So that's the cons of the 13F, but it does have some pros too. So let's do a quick recap. So we talked about what is smart money. That's the smart money, big money, $100 million of assets under management or more, because these are market movers and people look at it. They have more research, they have more resources and research and development and resources to make smarter moves than small money. So small money likes to see what the big money is doing. So the Form 13F, the 13F was created in 1975 based off the 1940 Security Act, if I'm not mistaken there. It was to open up transparency so people can see what is big money doing? What are they buying and selling, right? So that's what a 13F is. How to look it up, we gave a step-by-step tutorial. Go to sec.gov, go to filings, go to EGA search. Up under the EGA search, go to latest filings. Up under the latest filings, you're going to type in 13F into the forms, and boom, all the latest filings on 13Fs are going to pull up, and you can look and see what these big companies are buying and holding, right? The pros of it, you get to see what big companies are doing. You get to see what they're doing, what they're holding. It can justify why you saw gold shoot up, shoot down in the last quarter, because you can see maybe money moved in and out the market. You can see where money is going, and you can kind of get a way of what big money is thinking, right? The cons of it is already old information. It's information that's already been done. Look at Bernie Madoff, the guy who lied and stole a bunch of money. He filed 13Fs all the time. It's really unregulated. Nobody is if a company submits their 13F, nobody is there to look over their back to see if it's correct or what they turn in is the truth. So that could be the cons of it. It doesn't give you a big picture. You don't get to see everything of how much they brought in, sold, when, the dates. It's just giving you a list of holdings. So, ladies and gentlemen, that's why August 15th, this happens every quarter, but the next one, August 15th, we'll get to see what big money was doing during the second quarter. That's the deadline that they have to do it 45 days after the quarter ends. So, and this is free information that anybody can look up for themselves, and they kind of get a good look at what everybody's doing out there across the world in the world of investing. Anyway, ladies and gentlemen, my name is Prince Dykes. This is the Investor Show. If you like this video, if you got something from it, give me some comments below. Tell me what you guys and girls think. And until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe, peace, be safe. I'm out, and thank you.